We're moving to the technology panel, the use of technology in financial services, a mixture of Asian and European views. We've got a great panel for you today. We have Wendy Cheong, Managing Director and Asia Pacific Head for Moody's, Hern Shin, Assistant Managing Director, Banking and Insurance, MAS, Andrew Douglas, Managing Director and Head of Government Relations for DTCC, and last and certainly not least, Piers Haben, Director for Banking, Markets, Innovation and Consumers from the EBA. So I wanted to welcome everybody to the panel. We've been already, some of the earlier speakers had already touched on digital innovation as a big element of capital markets and the future of what we of financial markets, and I think now will be a good opportunity to kind of pick up on some of those themes that were already mentioned. So I wanted to kind of turn first, and when we're looking at this issue, and I wanted to give it over to Wendy to kind of talk a little bit about some of the future technology trends that we're seeing in the financial services industry. And so over to you, Wendy, and you can kick it off, and then I'll start with Andrew after that.
Thank you, Mark, and hello, everyone. I'm honored and delighted to be able to join you in these discussions today. I'll note 3 technology trends that Moody's is observing in the financial services industry. The first one is COVID has certainly accelerated digitalization. Moody's research shows that digital banking in APAC grew from 81% in 2019 to 86% in 2020. 80% of the banks that we've surveyed expect to maintain or increase investments in digitalization budgets in spite of expectations of weaker profitability. Second, risk analytics demand is rising and expanding holistically. The range of risks that financial services companies must now cover has expanded. Other than assessing and managing the company's own organizational risk and market risks, firms will also have to understand suppliers and customers' risks. To deliver more holistic risk assessment for our customers, Moody's is integrating ESG, cyber, and other technology risk into our credit ratings to help alleviate some of these customers' pain points. And another one of the common pain points that we've seen is related to the need for faster onboarding processes for KYC and AML, know your customer and anti-money laundering. This need for speed, accuracy, and transparency requires better risk assessment tools fed by relevant data to help all of us make better informed decisions as we manage AML and KYC requirements. We've also made considerable investments in AI, machine learning, NLP, natural language processing to enhance our credit ratings, risk analysis, and products to enrich the customer experience. The third trend that we're observing is an increasing focus on cyber risk. Moody's recently published a report stating that cyber risk will have a greater influence as a credit factor for debt issuers this year. On the report, we've identified key sources of cyber risk, including the vulnerabilities of software and vaccine supply chains, the rise in remote work during the pandemic, and the growing risk of state and state-sponsored actors. Looking ahead, we can expect an increase in tools and solutions to identify and mitigate cyber risks. Some of these may include cyber insurance, as rising ransomware attacks prompt insurers to reassess the pricing and contract terms of coverage. And cyber risk identification and assessments to help companies understand where their vulnerabilities lie and how to enhance their protection. So with these 3 key trends, we can conclude that there's a great deal of excitement about new technologies and the new ways to garner insights from an increasingly large and rich data pool. And this is where I concur with Marie-san earlier. Forums like this is helpful for us to have ongoing constructive dialogues amongst industry participants like myself and policymakers so as to strike the optimal balance between risk and innovation. A final point that I'd like to make and really leave you with this is we believe that technology is part of the answer to risk assessment, but not all of it. At Moody's, we see technology complementing what we do rather than replacing it. And this is because technology alone has its limitations. And analysis that come out solely from machines would need to be robust, have predictive power, and applied across sectors and over time. And this is why we rely on judgment, rationale, and a holistic approach that we believe is only possible with human insight. So on that note, I'll pass it back to you, Mark.
All right, thanks, Wendy. Thanks for really kicking us off and really, focusing on, those sort of three trends that you outlined, as well as actually, the fact that technology is a big part of what we're going to be facing with here in the industry, but it's not the complete solution. And so I'm gonna stick with the industry speakers for a moment, and I'm going to bring in Andrew. And I, from Andrew, I'd like you to kind of talk on and focus a little bit on, what are you seeing as the industry's challenges around the regulation and technology? Sort of some of the broader big themes around things like regulatory consistency, cooperation, free flow of data, which Marita-san had talked about, and some of the other panelists, the challenge around future new entrants. So so over to you, Andrew.
Thanks, Mark. Can you hear me? Is that?
Yep. I hear you perfectly.
Yeah. So firstly, let me just say I'm extremely jealous of the fact that you've clearly been able to get a haircut. I have not been able to, being here in the UK. So thank you for the invite to speak today, and good morning, good afternoon, depending on where you are. We're here, as Mark has said, talk a little bit about tech in finance, and in simple terms, I think we've seen in the last 12 months how tech has impacted our industry. I'm speaking to you from 6,000 miles away, as I look out the window, cold and rainy England. I note it's not cold or rainy in Bangkok, so you can guess where I would prefer to be. We've seen, I heard somebody, an industry commentator saying recently, we've seen a decade of change in 12 months. And I guess the first thing to put on the table is that as a financial services industry participant, as a market infrastructure in particular, we have to recognize that I may, or it's not even may, let me say, I will be competing with organizations in the future that possibly don't exist today. So technology has to be taken seriously because it is giving birth to these new organizations. And several years ago, DTC's CEO, Mike Bodson, he talked about the potential for technology to disintermediate financial market infrastructures, such as the DTC. And he made the statement that if anyone is going to disintermediate the DTCC, it's going to be us. And so to this end, we have been conducting a mix of implementation and exploration of new technologies as we look to modernize our businesses. And to this end, we've integrated, for example, cloud. Cloud is a very old piece of tech in absolute terms, but certainly in terms of its implementation in financial services, relatively new. So we've integrated cloud in a number of areas, as well as exploring some of the more radical technical developments that we've seen in recent years, such as DLT, for example. So we've run proof of concept on the application of DLT, the use of APIs, how tokenization might allow us to, let's call it, reimagine the US domestic clearing and settlement market and how that would have an impact globally. Blockchain clearly is seen as a disruptor, but as I mentioned, we shouldn't dismiss or underestimate things such as cloud. But also we're looking at AI and robotics as to how they can play a key role in developing market infrastructures. And that sort of leads me on. It's been interesting listening to the other speakers earlier in the day talking about particularly the regulatory impact of these technologies. And I was reminded of a conversation that I had actually in Asia probably 2-3 years ago, where I was talking to a commissioner at one of the regulators. And he was talking me through the headache that he has of trying to regulate the sales of financial products that were being sold over social media by organizations that were not even in the country for which he was a commissioner. So how do you actually start to regulate a participant that you can't even see using a communication channel that isn't in your jurisdiction. Here in the UK, we've seen the Bank of England looking at the future of its regulatory reporting regime, in this case, central bank statistical reporting. And in its recent paper that was published in the last month or so, it identified three key areas where I think we need to focus on development. One, the first one, which I'll highlight, we've talked a lot about this morning. I think Ashley referred to the need for globally consistent standards in several areas, and many of the speakers have talked about global consistency and common standards. So that's the first one. Second one, modernization, which is how you can turn, for example, regulation into code so it can be implemented in a more common fashion between organizations. And then finally, the integration of that data flow into mainstream governance and processing. So each of those areas will be heavily influenced by the tech that we've got today, DLT, cloud, we talked about AI, robotics, but maybe also technology which doesn't exist today, which is an interesting concept, I guess, trying to second guess the future. So I think what I do is finish by highlighting three characteristics that the research that DTC has conducted into the implementation of new tech, issues that we've highlighted as critical when you think about the application of new technology, particularly in the area of financial market infrastructures. Firstly, the tech has to be bulletproof. We can't afford to implement a tech that's not been tested to destruction again, and again. Given the centrality of FMIs, financial market infrastructures, to the appropriate functioning of a market. Secondly, they have to be instantly scalable to cope initially with the huge market volumes that we would deal with in the regular run of our day-to-day business. But also, if you look at the kind of volatility spikes that we've had in the last 12 months, but also in recent years for a variety of reasons, the technology has to be scalable at the drop of a hat, literally, to be able to cope with that volatility. And thirdly, because of the way that market infrastructures work, any implementation would have to be coordinated and probably staged because of the complexity of changing a system which impacts every single participant in the market. So they're the sort of the three key things that I'm looking for, or we're looking for in technology: bulletproof, scalable, and coordinated release. On that, Mark, I'll hand it back to you. Thanks.
Thanks, Andrew. And yes, I think I'm lucky I got in and got my hair cut, because we're going through another mini spike here in Hong Kong. And so I wouldn't be surprised if I won't be able to do that for quite some time going forward in the next few weeks. Before I come over to the regulators, I just want to remind people there's a Q&A function. So please, if you've got questions, please use that function. I'll do my best to put that to the panelists as we go on and at the end. So I'm going to bring in the regulators now, and both of the industry participants talked a lot about either the trends, the challenges that the industry is facing, as well as actually what they think they require from tech going forward as an industry. So I kind of want to see how the regulators address those. I mean, what is their response to that? And I'm going to start with Hern Shin from the MAS, and just before I turn over to her, I just wanted to actually congratulate her on her recent promotion at the MAS. So thank you very much for that. I know you're the head of financial supervision now, so we just wanted to personally congratulate you on that. So I will turn over to you now, and for your thoughts on this and how the regulators would address it.
Thank you, Mark. Thanks for inviting me to this very timely and important discussion on the use of technology in financial services. So the financial services has been quite fundamentally transformed in recent years by the adoption of technology. I wasn't available to attend the morning sessions, but I'm sure we would have noted how technology adoption helps financial institutions improve the efficiency of their internal processes. It allows them to really reshape the way financial services are delivered. So think about e-banking, perhaps robo-advisors, e-payments. Technology has also allowed us to imagine new solutions in important areas such as financial inclusion, green finance. So as regulators, we really want to see technology being harnessed in a way that will benefit consumers, regulated institutions, as well as the regulatory community. So we have, in a sense, been rather open and, in fact, facilitative towards the adoption of technology by regulated institutions, whilst making sure that we have the capability and the regulatory levers to identify, measure, and manage the associated risks that could be introduced by new technology within the financial system. In terms of sort of the broad principles that we have used in tackling this wave of rapid digitalization that Wendy talks about, the first principle, and I think it's an important one, is that we're really technology neutral. New technology will always come in the market. And as a regulator, we're not going to, put bets on horses, nor say we prefer one type of technology versus the other, whether it's AI, DLT, big data, visualization. To us, we're technology neutral. The important thing is that risks are well identified, well understood by the institutions, and therefore well managed. The second principle that we do adhere to is the principle of being activity and risk focused. So similar activities should be regulated in a like manner. So, in response to Andrew's question, we don't know what new entities are going to come that we will have to compete with in the future. The comfort that I suppose a big part of the regulatory community can provide, including the MES, is that if it walks like a duck, quacks like a duck, it will be regulated like a duck. So we haven't hesitated to provide those kinds of clarifications to our rules. About 2 years ago, when digital tokens, ICOs, were absolute rave in Singapore, lawyers were really busy then with applications. We did not hesitate to come out to give guidance on how our existing regulation would be applied to ICOs. So for example, if a digital token is in fact a representation of a share in a company, it will be regulated like an equity security. Similarly, if it represents debt on a company, it would be regulated like a debenture. So it really it's really important to ensure that this principle is upheld, because it ensures that whenever a regulated activity is provided, it doesn't matter what technology has been used to provide it, we will seek to capture it and regulate it within our regulatory ambit in a like manner. And the other, I suppose, important principle that we seek to do is to be rather collaborative. You would know that, as a regulator, we participate in many international standard setting forums, the Basel Committee, IOSCO, CPMI, IAIS. And these international standard setting committees do try to promulgate best practice, minimum baseline regulatory requirements that would apply globally, of course, on a opt-in voluntary basis. We understand this is important, and we agree, with the comments made by both Wendy and Andrew and other speakers earlier in the day, that consistency in regulation is going to have lots of benefits. I mean, to the extent that regulations are consistent, it will lower compliance complexity, it will lower compliance costs, particularly for institutions that operate on a cross-border basis. So we do try to reach out to other regulators to see if we can achieve greater consistency. But as Vice Minister Morita highlighted earlier, reaching nirvana is going to be really difficult. After many, many decades, our even accounting standards across jurisdictions are different. And the reality is we operate under different legal systems. We have different regulatory mandates. The society and the public that we serve in our respective jurisdictions have different expectations of us. And therefore, consistency is really difficult to achieve. I would venture, though, that it would be important to identify areas where consistency is the most important and start tackling them on a collective basis. So one example of this would be in cyber incidents response and recovery, just speaking towards the tech adoption bit again. The FSB noted that it was really important if financial institutions offering essential services especially are taken down in a cyber attack. That should not be surprising. Cyber attacks can and will happen, but our goal is really to make sure that as and when they do happen, we make it as small an event, the impact as negligible as possible. And to do that, cyber incidents response and recovery is going to be crucial. And given that financial institutions operate on a cross-border basis, they would need to coordinate response and recovery efforts, not just with stakeholders, connected parties all over the world, but also with their regulators, as well as other authorities that oversees them. And in this regard, the FSB set up a working group about 2 years ago. And they came up, this is called the CIRR, or the Cyber Incident Response and Recovery Working Group. And they came up with a toolkit of effective practices for financial institutions, their supervisors, and other relevant authorities on how to work with and support financial institutions before, during, and after a cyber incident. How do you respond and recover from that well? So although these are not mandatory prescriptive standards, it has really, drawn that line in the sand and has, put out that clarion call for financial institutions to work collaboratively with stakeholders, supervisors, authorities to start the preparatory work on how to respond effectively to a cyber attack well before the attack even begins. So that's an area that I think we have really identified, prioritized, worked together for consistency. And, we would always love to hear from the industry, what are the other areas that we should prioritize and work together on so that we get, effectiveness in terms of resilience, good quality services as the financial sector digitizes at great speed in the years to come. I think I'll stop there. Over to you, Mark.
Great, thanks, Hern, Shin, and thanks for touching on a number of things, including technology neutrality and regulation, activity-based regulation, and the importance of that, the importance of being collaborative and working on consistency, even though, as you mentioned, the challenges related to that. And then really focusing on the things that are important, like cyber, which I think is something both the regulatory community and the industry would agree on. So I want to now bring in Piers, from the EBA and get a European perspective here. Piers, is this do you have the same approach to regulating the ducks as Hern Shin does?
Yes. So I could stop there. I really enjoyed Hern Shin's intervention, and again, when you talk, when you think about consistency, the approach that Hern Shin was describing, I think very much also reflects the approach that I would talk about. But maybe let me give a little bit of flavor around that. So, I mean, I would also start with technological neutrality. Technological neutrality is absolutely crucial. As Hern Shin said, it means we don't favor or hinder a particular technology. And I think what I would say, it means we don't favor or hinder a particular player in the market, either incumbents or new entrants. So for us, it's very important that we are neutral in all that regard. And that doesn't mean that we stay put, because in order to remain technological neutral, it requires a dynamic approach. So we have to be continually monitoring the situation. We need to monitor both new technologies and the perimeter to understand how the perimeter of regulation is affected by technology. And then we have to reflect on what's happening. So this monitoring part is really important. That's really important both in the EU and internationally, and that we share experiences. And we then have to think how we adapt. So for me, there's a process of monitoring, adapting, and implementing. And during the monitoring process, we share information, we understand also practical supervisory responses, and we decide whether we need to change, and then we can adapt. And I think also listening to Wendy's sort of description of some of the key themes, I mean, I think we're adapting fast. I mean, we have new guidelines and regulations on ICT security. We have new regulations on incident reporting. We've given out guidance on remote onboarding. We have guidance on the cloud, which help that digital acceleration. So there's a whole bunch of stuff that we're doing to adopt. And sometimes we have to adopt in stages. And I'll give you the example, adapt in stages. And I'll give you the example of cryptos. And I've heard cryptos mentioned a few times. In 2014, when we started looking at the crypto asset space, we were quite worried, and we were warning consumers about the risks of crypto. It's not a regulated product. You know, you're not going to get your money back necessarily. And we've maintained those warnings, but we've also looked underneath crypto to understand what's going on with the technology. And so we've produced reports explaining how the DLT technology can be used, the different types of tokens, so utility tokens in particular being something that gives you access to a technology, whereas other tokens are more about sort of investment type approaches. And now we're ending up in a space where we have a legislative approach from the European Commission for a market in crypto assets to give some sort of regulatory overview of some aspects of crypto, in particular wallet providers and such things. Although I would note that we put AML in the crypto wallet space very quickly. And with that example, actually, I'd like to pick up Hern Shin's point also about activity and entity-based supervision, because for me, I really think that some of the new technology developments really raise questions for us about activity versus entity-based supervision. As a prudential supervisor, which is what in the EBA we primarily are, you know, we think that entity-based supervision remains very important, and you know, credit institutions, banks are special because they've got your money, and they're doing things with your money, and that's really important in the form of deposits. But at the same time, where there are activities that are similar with similar type risks, as Hern Shin said, then we need similar supervisory approaches. So we need to think about a matrix of activity and entity-based supervision. And I see that both in the crypto space, but actually perhaps from a more old-fashioned perspective in the payment space, where we have, for payment service providers, you know, we've got different capital type approaches, but we have exactly the same ICT supervisory requirements. We have exactly the same strong customer authentication requirements. So you sort of see a matrix of entity and activity-based regulation. And for me, that's incredibly important. So technological neutrality driving our approach, monitoring, adapting, and then implementing, of course, very important. And if I may, Mark, just finish then with, I mean, Hern Shin was reflecting on coordination. And, you know, look, you won't be surprised to know that I'm a big fan of both sort of a multilateral approach and indeed where we need to identifying standards that work across borders. That's absolutely, you know, it's part of my job. It's part of my daily job in the EU. And as you've heard from other speakers today, reaching out in the international financial architecture. What I think is interesting, and actually a bit back maybe to Wendy and Andrew, in the international financial architecture, let's say something like the post-crisis, not this crisis, the old one, you know, 2008, post-crisis reforms we went in a very logical sequence: G20, FSB, Basel Committee, European level, the Commission, the EBA, competent authorities. It was very much focused, and I'm talking here on the space that I'm responsible for, so banking, very much focused on things that we knew about: capital and liquidity. We know what it is, we know what it's for, and we know how to do it. We might have lots of discussions about the right level, but you know, we knew what we were doing. And that resulted in very clear, I think, global standards, which have, by the way, put us in exactly the right position for this crisis. So much higher capital, much higher liquidity. So Basel III implementation. The question, I guess, is if we look at new technologies emerging, and we have this approach of technological neutrality, so we need to understand it first. What do we expect from the international financial architecture? Because sometimes I hear this request for, well, let's move early with very clear, detailed rules on new technology as it emerges. And I have a question about that, because I think what's really important is that we monitor first, and we have this discussions and understanding about what the technology is, what it's for, and how we might deal with it. And that we share supervisory experiences. And I really appreciated Hern Shin's comments on the importance of sharing supervisory experience and practice. And I think that's a real important focus for the international community in understanding common ground. And then when we're ready, thinking about how we can identify appropriate common framework. But I think there's a lot of space for us in the international financial architecture of this sort of sharing of experience. And I think it also speaks to Tokyo Morita's points about, just finding how differences might be looked at. I paid close attention to the discussion on the ESG taxonomy as someone who spent some years of my life looking at the EU ESG taxonomy. I think it's really important that we do find common ground on taxonomies. What I would say is if we waited to find a global taxonomy, I think we'd be waiting a long time. What's important, I think, is that we have to press on with our work at different levels, but what's absolutely key then is that we find some common ground internationally. So it's a conundrum. How do we move forward internationally when technology is moving quickly? I think there's a risk of jumping in too fast. We won't be technologically neutral if we write detailed standards for one technology which impedes another, but at the same time we need this crucial information sharing and understanding how supervisors are responding to new technological developments. Let me stop there, Mark.
Piers, thanks. I mean, that was really a lot in there, and a lot of interesting aspects of what you said. And I mean, it's also very good to hear that broadly yourself and Hern Shin agree on the neutrality, on the activity based, on the collaborative approach. And I think your points about how fast to move and your monitoring, adapting, implementation, and the fact of moving, that we've had to move quick on things like tokenized securities, and we'll come back to that later. But also, you want to have as much consistency and collaboration as possible, but you can't always wait for global coordination on these. I'm going to stay with you now, though, because you referenced the previous the GFC and what was done, and sort of you basically very at a high level set out the roadmap of how we got out of that on the back of that, and put us in a good stead for what we're facing now. But how are you seeing the pandemic impact the regulation of technology? Andrew mentioned, off the top that we're using technology now because we can't meet physically. But what are you seeing there? From the COVID pandemic. To you, Piers. Yeah.
So I referenced earlier that in many senses, some of the responses to the previous global financial crisis had put us in a good space to enter the pandemic, as bad as the pandemic was. And I talked about, certainly in the EU, much higher capital, much higher liquidity, and we'd already done quite a lot of work on the asset quality, which allowed then widespread moratoria to be put in place, and we understood how to manage that. So that's all fine. But I think more important is the point that Wendy's first theme about digital acceleration in the pandemic, and how well were we prepared. And I think, again, I'd be interested to hear from others, what marks would we give ourselves generally? And obviously I would be asking, what marks would you give the regulators? Because I think we should feel, again, there's a terrible human cost in the pandemic, but the ability, certainly in financial services, for everybody to start working online at the same time that all of the customers went online, put incredible strain. It speaks to the scalability point that Andrew was talking about. Suddenly we really had to scale up. And it seems to have gone reasonably well, given the kind of things that could have happened. And I think that, again, I really think that, the poor guys working in IT systems around the world have done a great job. But we also should identify that we have done some things right in preparing for the pandemic. So beyond the sort of the more traditional prudential regulatory space. And I would point to a few things. And the first, and I think the most important, is actually the cloud. And Andrew, you refer to it as old-fashioned technology. I guess this is in relation to technology time, right? Because you know, we've never been moving so fast, but I'm sure we'll never be as slow again in the future. I think the work that we did on the cloud, and honestly, so we've done a lot of work in the EU on the cloud. I see that very much as inspired though by the FSB's work on operational resilience, the BCBS work on operational resilience, and we've amplified that out to make sure that, again, technological neutrality, that instead of supervisors saying, well, I don't understand what's going on in the cloud, so therefore I'm going to tell you I don't like this outsourcing to the cloud. It's much more, well, here are the questions that I need to ask you. What are you doing to ensure security? What are you doing to ensure auditability? And the fact that we had those discussions way back in 2018, so a long time ago now, 2018, 2019, and we equipped the supervisors and the banks to have that discussion, meant that in 2020, when absolute capacity in the cloud was absolutely vital in order to scale up to suddenly all of your staff and all of your customers to be online, meant it was a business decision, and it wasn't a, oh my gosh, I'm really worried about the supervisor's decision. I think that's good marks to us all. I think on ICT security, the fact that we already had in place, so in the EU we had some incident reporting, we'd spent a lot of time again working internationally to understand the direction of travel of different jurisdictions, and then amplifying that in the EU with our ICT security guidelines, which apply to banks and payment service providers, in our case, meant that we had a sort of common understanding of how ICT security should be looked at. And then for customers, and Hern, I was really appreciated your comments about the importance of technology for citizens. You know, we had already been put in place much stronger security requirements for payments. And the combination of stronger security requirements for online payments, which has been proven to keep customers safe when there's a hack, along with specific exemptions. So we asked payment service providers to increase contactless payments, the amount on contactless payments in March last year because of the pandemic. Again, I think just made people's lives better. So I think we've done quite a lot of good. Again, I'd be interested in others, maybe more negative comments about what we could have done better, but I would give ourselves reasonably good marks. Finally, let me just say we had also released sort of information for supervisors about how digital onboarding should be taken forward. There, I give ourselves half marks at best in the EU, because I think there were differing approaches to digital onboarding, but at least all of the supervisors were aware of the need for digital onboarding, and it did allow a movement to digital onboarding very quickly. So half marks, maybe a little bit more.
Okay, great, Piers. Maybe I'll bring Andrew in and Wendy on the topic on you know, what do we learn from the pandemic on the technology and how the regulators have done. You know, Andrew, maybe over to yourself, and also you know, Piers also did mention you know, tokenized securities and DLT and that aspect, and I think you have some views on that as well. You may want to share.
Yeah, sure. Thanks, Mark. Just to, I guess, to Piers's point. On the cloud being old technology, cloud's been around for 20 years. But it's taken that long, I guess, for people to become comfortable with it, to use it in the kind of industrial environment that we're talking about. What could we have done better, or what could regulators have done better? I mean, I think we've had some interesting conversations internally. I mean, we're a modest-sized organisation by any stretch of the imagination. About 5,000 people globally, but we went to working from home overnight on a Wednesday, I think it was. And I did say to our CEO, what if you'd have given this as a project to the firm to work out how to work from home, how long do you think that would have taken? And we'd probably still be doing it now, but it was literally overnight. It was seamless. And I think, to your point, Piers, about the kind of things that we've put in place previously in order to combat these kind of market threats, they've clearly played a huge role, and resilience is a key area. And we've talked a little bit about, Hern Shin was talking about cyber being important. Cyber for us, because we're an entirely effectively an entirely digital business, receiving information over the web and providing information over the web. The need for that digital resilience has exacerbated. So we have a specific group within the firm that deals with this digital operational resilience. So things like the DORA Act in the EU, that's critical for us and we're very supportive of the work that is being done there. And again, one of the key bedrocks of that, which we've heard the word being used many, many times, and that's harmonization or coordination of efforts to support building that sort of resilience. And what we need to see is continuation of the coordination between regulators. I mean, one of the areas, I guess one of the things that I would take slight issue with Piers, talking about how we dealt with the last financial crisis, where it started with the G20, then that filtered down to regional or national regulators, and then filtered down into markets. There is still plenty of opportunity in that chain for there to be interpretation of how solutions should be implemented. So one of our key businesses that we operate globally, and I'm not going to particularly dwell on the derivatives reporting business, but we provide that in multiple centres, and we effectively have a separate solution for each individual centre, even though this all started at the G20 level. So there is perhaps some learnings that can be derived from that. You talked, Mark, about tokenization. We've spent a lot of time, I referred to the comment that Mike Bodson made about if anyone's going to disintermediate the DTC, it'll be the DTCC. So we've spent a lot of time looking at things like how you would use distributed ledger to reimagine. I think Hern Shin used the word reimagining how business works, and that is what we've kind of got a reimagination department, if you like, who are looking at how these technologies can change the way that we operate. So we've run, and I like to think that there's a lot of people who talk about this kind of reimagination, but not many people are actually doing it. And I'd like to promote us as an organisation which has actually put its money where its mouth is. So we've run, in the last 12 months, we've run a proof of concept. It's called Project Ion. You can read about it on our website, where we've looked at how things like DLT, how tokenization, how artificial intelligence, how the use of the AIPs would work, and how we can use that in the future. And in fact, one of the things we're looking at now, which some of you may have seen, is a white paper that the organisation has produced about moving, and I know it's out of the European Asian territory, but moving the US market to T+1 settlement, which may or may not involve some or all of those technologies. So it's a case of constantly keeping on top of what is coming down the pipeline and horizon scanning, I guess, to make sure that you know what these technologies are. And as I said, maybe there's a technology out there, or maybe there is a technology which isn't out there today, which is going to revolutionize rather than allow evolution. And often what this technology does, it is the difference between revolution and evolution. As I said earlier, as a market infrastructure, one of the things that we can't do is just wholesale throw away the infrastructure that we have already. So it's how you, and I think again Piers talked about this, how you stage the implementation of these things. So it's good to hear that the regulators are remaining technology neutral. I would expect nothing less, not in the market of being kingmakers, as it were, or queen makers. And we carry on doing the research, doing the experimentation as these different technologies and different ways of operating the business come to the fore. And we work very closely with the regulators and all of the jurisdictions that we work, because I think in addition to the regulators talking together, again, a point that's been made previously, market participants have to keep in contact with the regulators to ensure that we're both up to speed. The principle of no surprises is crucial in this area, I think. Mark, back to you.
Thanks, Andrew. Thanks, Andrew. And I thought your comments about working from home were apropos about how, you know, it would take forever if you gave everybody a project to do this, and that we did it pretty much overnight. And in fact, I mean, we are just putting out something on working from home where obviously we really commend the regulators for allowing the regulatory flexibility to do this on a temporary basis. But now looking forward, how do we do this on a more permanent basis, which has its own challenges. Look, we're running out of time, so I want to make sure I give enough time to Wendy and Hern Shin to close on this. There's so many topics here. We could do a week-long event on this, and in fact, we are doing a week-long event on this in May. So please look out for that if you're interested in technology and operations. But Wendy, I wanted to kind of turn over to you and see if there's anything you wanted to respond to what Piers said or Andrew said on what did we learn from the pandemic. But I also know that you want to talk about ESG and sustainable finance, which has been another theme that we talked about earlier today, and how technology is impacting that as well.
Right. So maybe the short answer to Piers's point is I think we did pretty well as an industry. I would say investment grade, positive outlook. So that's the short answer, and then maybe I'll focus my time on ESG. So I'm really glad to be speaking on this topic of ESG. I got to say, this topic has come up in almost every external meeting that I've had over the past 1.5 years. And this really goes to show how ESG is moving into the mainstream and now well beyond its former status as a niche investment class. What has helped is the increased availability of hard data. Data that is accessible, reliable, and comparable will continue to fuel the future growth of ESG and its contribution to green transition and the transformation of economies. Policy and regulations are also playing a constructive role in this transformation. A couple of examples here. In Hong Kong, a cross-agency steering group is working to build a local green taxonomy for use across the financial services sector that is aligned with global standards. In Singapore, so many major activities are happening in ESG. One of MAS's many ESG initiatives is the establishment of the Green Finance Industry Task Force to accelerate the development of green finance in Singapore and the broader ASEAN region. In Korea, the onset of COVID has accelerated green policy with tangible policy push for mandatory ESG disclosure requirements for all listed companies on the KOSPI by 2030. And on our end, Moody's is also playing our part by incorporating ESG risks in our ratings and analysis. We've updated our ESG methodology. We've introduced ESG scores for sovereigns and have plans to roll it out to a broader set of entities as part of our focus to deliver transparency and granularity. And we believe strongly that this is a major step in building trust around ESG exposures and its corresponding impact on credit for rated issuers and transactions. Maybe another example on the data front where we're working with our ESG affiliates, Visual Iris and 427, to build out sustainable finance and climate risk data assessments and solutions to meet this growing needs of issuers and investors. I think this was mentioned a few times in the earlier sessions, but really we're facing common challenges here, common challenges in moving ESG from niche to mainstream, and some of these issues include the inconsistency of data as well as different taxonomies across sectors and geographies. I'm going to do a plug here for those of you who are interested to dive deeper on this topic. I would recommend ASIFMA's recent report titled Data Challenges and Opportunities for ESG and Sustainable Finance in Asia Pacific. So just to wrap this up, I think in summary, Clearly, there are impressive initiatives underway to address the challenges, but I'm not sure. I'm not immediately sure as to how we can collectively develop a taxonomy that works for the unique markets in Asia Pacific, or for that matter in the EU. And I know many prior speakers have spoken about this already, but I would agree with them that perhaps a principles-based approach is more practical and could be part of the solution. And I know, the term harmonization has been thrown around and used a lot, but perhaps interoperability is a more practical approach at this juncture. So with that, I'll pass it back to Mark.
Okay, thanks, Wendy. And obviously ESG is extremely important, and I take your comments on the interoperability. So I want to give the last word to Hern Shin. I know that she talked about cyber in her opening comments, and Piers talked about cloud and how what we've learned from the pandemic and security. So I'll hand over to you, and I think you have some thoughts on tech resilience of the cloud, and also you may want to comment on what else the other speakers have said, whether it's on DLT or ESG. So last word to you, Hern Shin.
Thank you very much, Mark. I'm really tussling in my head what to focus on, because there's just so much to cover. So maybe a bit of everything, like a buffet, So first, in response to Piers' comments, how well are we doing? Immediately, the picture of a swan on the lake came to me, where you look all graceful above the water, but you're paddling like crazy underneath. And really, during the pandemic, although I agree with Piers, the fundamental frameworks for supervising technology risk has been in place, right? But the focus areas have really changed. When banks and insurers, in fact, all financial institutions went en masse remote working, we had to jump in and check on many areas, right? How do you do patching, on a remote basis? What's the trade-offs if the patching are not done? Do you allow staff to work? Do you allow staff not to work? The networks that staff use, right? The residential broadband networks are quite unlike the lease lines you have in the office. They're not as safe. Are financial institutions encrypting end-to-end when they transfer sensitive information? That's another area we've had to check. Are staff aware that they really need to be very, very conscious about shoulder surfing when they are working, in public places? I think that's another area that we've had to look at. And then, of course, with widespread digitalization and accelerated digitalization, the whole issue of cloud adoption has come back into the fore. Although financial institutions have been quite conservative about perhaps putting core systems in the cloud, but the adoption is coming, and coming very quickly. And of course, there are questions such as cloud concentration. There are just those few cloud providers that large cloud providers that service financial institutions, and in fact anybody. What happens if they get compromised? Would essential services be disrupted? Not just in Singapore, but globally, and in quite an impactful way. The other thing is that generally supervisors have seen cloud adoption as a kind of outsourcing. So the outsourcing principle is that financial institutions, you can outsource the activity, you can't outsource the responsibility. So financial institutions have to make sure that the cloud service providers adhere to the financial institution standards for cyber resilience, data protection, so on and so forth. The unfortunate thing is many financial institutions, particularly the smaller ones, find that they have no bargaining power. The cloud service providers say, well, I'm one of the best in the block, take it or leave it. I don't think my competitors are going to, do something so customized for you either. So we've been working with fellow regulators as well as vendors, and exploring ideas such as a cloud oversight committee, maybe some collaborative cloud oversight group like the Swift Oversight Forum that may allow supervisors to come together, in that collaborative spirit, share experiences, and to work together to supervise important cloud service providers. The other one is to see if cloud service providers, the larger ones, whether they would be willing to come up with community clouds only for the financial sector community. And I note that both IBM and Microsoft has announced plans in those areas. We're very happy that there's traction in that area, and we look forward to making advancements in those areas. But just coming back quickly to Wendy's point on ESG, I think because we're really talking about financial technology, the question, quite aside from taxonomy, which we know is a problem we need to solve, is what is the potential to leverage on technology in the sustainability journey? Will it give us that huge boost, that leg up, right? You may have more data now, as Wendy said, but can we perhaps make use of artificial intelligence and other technologies in order to gather, analyze third-party data to very quickly quantify ESG impact of potential investment portfolios, for example? That would be really exciting. Are we able to make use of IoT and other technologies to monitor commitments once a loan is made or an investment is made? So these are all interesting ideas that MES is embarking on another project. We call it Project Greenprint. It's a technology platform aimed at promoting green finance ecosystem. And within this platform, we really hope to bring, SMEs, fintechs, financial institutions, investors together to build this ecosystem of using technology to improve the way we're able to understand, quantify, and therefore leverage on data to make decisions in the green finance space. So that's another exciting area. We don't know whether we'll succeed. We're really embracing whatever partners that would come work with us on this. And we hope that, that will really make a huge difference in this important area of ESG. Thank you.
Thanks, Hern Shin. I think I think we're out of time, and I really wanted to thank all the panelists. I thought it was a wide-ranging discussion on a topic that, as I say, you could take a whole week to discuss. And Hern Shin, your concluding comments. You touched on AI. I know Piers wanted to touch on that. We just really didn't have the time to focus on it. But your views on a cloud oversight committee, I think, is a very interesting one. We've been talking to some of your colleagues at MAS and based around this SWIFT model and potentially cutting out financial services because financial services is already extremely well regulated by yourselves and treats data in a very secure way and ensures privacy. So maybe this is a way forward. And I know my colleagues at ASIFMA, we're going to look at this at the GFMA level, global level, and we're going to come back to you on that because I think it's a very interesting a possible way forward with the cloud providers. As a solution to some of these issues. So, but I'm gonna have to end it here. So again, thank you all very much. Thank you for those in Asia, Hern Shin and Wendy, for staying late and eating it into your Friday nights. But we still have 2 speakers left, so please stay on.